Hey everybody, Brian here from quantlabs.net. What you're looking at is what I was hoping to do using Duca's copy as a data source. Hopefully you've seen my last video where I said Duca's copy is throwing me a lot of exceptions. So if you go into that video, you probably will find it right here. It's only a 3-minute video. You can see it in action at the channel.
Hey there, how's your trade?
Oh, here we go. This one right here. Does Duca's copy limit amount of historical forex data or something like that? So it's a 3-minute video, and what it will show you is the exceptions that I had from within NetBeans with the Java, and lots of exceptions were being thrown from the Duca's copy servers. Connections were being closed as well. So I'm not sure if there's some form of limitation on what you can download from Duca's copy, but remember that it's using a test account or a development account or a demo account. So there may be limitations with that. I don't know if there's limitations if you have a paid or a live customer of theirs. So as a result, I resorted back to my old script, which resulted to this. Now, this is using IQFeed as the data source. Now, what it is, I've shown this before. So today is the 5th of October. And what it does is it will list out all the different combinations of currency pairs. And then from there, it will list out the data that's or the pairs that are volatile by week, by quarterly, by month, 6 months actually, and then of course we have the standard deviation. So right now it's sorted by 7-day, and right now what you'll find is the most volatile are the South African rand and Japanese yen, the US dollar and South African rand, and these kind of make sense because of the basically the volatility that's going on within South Africa with the political turmoil. There's so much no clarity there, so that's hitting their currency. I'm not sure why the US Mexican pesos volatile. Maybe some tension between the two, and then New Zealand Japanese yen, and then the New Zealand Swiss franc. Now, do realize some of these pairs may not be accessible with Duca's copies, so some of these will be taken out. So we need to realize that. So I have to have a special filter for that. But if you allow me to check out the volatility of all the other stuff, we are going to check out the quarterly. So I believe we need descending, so we want, oh, hang on. So let me just make sure I have that correct. Okay. Okay, so that's correct. The most volatile are, yes, no, I got that wrong. So this is over the week. So it's the Japanese yen, sorry, the rand and the Japanese yen, the New Zealand and Swiss franc, New Zealand, and the Canadian dollar, New Zealand, and the Japanese yen. Now, from my perspective, these kind of make sense because of, as I said, the political turmoil in South Africa and the Japanese yen as a safety trade. Politically, they just had an election in New Zealand, so that's probably why these are fairly volatile. I'm just kind of surprised that the euro's not as volatile due to the German election as well. But that's what I'm surmising here. But I'll go on about how I will plan to approach this. So knowing that, now we can move on to the next one, which is the quarterly. So we're going to do D. column D that is, descending. So looking at, let me just make sure we did this correctly. I'm going to make sure, I like to make sure that this does work. Okay, so now we have this one, which is pretty well the same. So you can see that a weekly and the quarterly and the daily or weekly are pretty well the same. So if I do the monthly 6-month one, let's do that as well and see if that changes. And I've done this a few times before, and it's pretty consistent that that these do stay pretty well. Just making sure. Sort, descending. Okay, so in this case, things have changed over the long run of US dollar, Mexico, Swiss franc, Japan, British pound, and Swiss franc, US, and the Norwegian kroner. So lastly, we will do this same test for the standard deviation, which is column F. And yeah, that looks correct. Okay, so that is correct. So again, we do come back to a similar combination, but I would probably put more emphasis on the weekly one because we do want the shortest term one. So if I do the go back to the first one of column C. Just give me a second. I'll explain what we're going to do here. Okay. Now, here's the thing. We know the two safety trade or safety havens are usually the yen and the Swiss franc. So this is quite possibly accurate, especially with the rand and the political turmoil, as I said about South Africa, and then the New Zealand election going again with the safety trade of the franc, Swiss franc. So these two would probably make sense. Now, let's talk about this. Now, for my testing, what I have noticed is if you're like me trying to get a 1% move on your trades of profitability, usually you want to go after the ones that give you the that are more volatile. The trick is to make sure we get the calls right and the forecasting on the potential for profit. So we gotta make sure we get that correct. So part of it is when I've tested this, usually most of my profits come from the most volatile. And then if I try to include, let's say, the top 5, usually 3 of them, or even if I did, let's say, 10, usually, and I put some money on the 5 or the 10, usually what I've noticed is that at least 2/3 are going to lose profit-wise. So you're kind of guessing and you're increasing your risk of losses. Whereas if I just focus, let's say, on the top 2, I have a much higher percentage of having winning trades. And you just got to make sure, as I said, the forecasting is correct. Whereas if I put on trades for the top 5 or the top 10 most volatile, usually those 2/3 are going to lose. But because there's so much volatility in the higher volatility, it usually wipes out the losses. So if you want to increase your profits and reduce your losses, I would just focus, again, probably on the first 2 or 3 most volatile for your trading session, maybe even the trading week. And keep an eye on this list of what is volatile and what is not. So that's something I have noticed in my testing. Now, the other big thing is with this, everything also comes down to how you do your entries and exits. We've talked about that in past videos, so we're pretty well covered there. And I think part of the plan is when it comes to your trading session, I can tell you most of the news that breaks is when I sleep in the Eastern Standard Zone, New York time. I find that most of my alerts for forex or anything that will move the forex markets is usually early morning when I'm sleeping, from anywhere from 3 a.m. my time till about 10, 11. And that's where most of the news comes out. So obviously that's going to have an impact on moves as well. So I guess, and it's pretty commonly known that most of the trading volume globally per day happens on the early morning sessions of London time when the markets open, because majority of the currency market globally is out of London, and then followed by when New York opens up at 9 a.m. my time, or 9:30, whatever it is. So that also has an impact. So part of my plan is to focus on those trading times. Have automated trading open up as a trading session during those volatile moments between, I guess, 3 a.m. my time when London opens till about 7 a.m. maybe. And then 2 hours later, follow it up with less volume expected for a couple hours when New York opens. So it's like kind of like two trading sessions. Asia doesn't move a lot unless you're trading a lot of Asian currencies, but you can see here the only ones are the Japanese yen, but it's more of a safety trade. And in the previous sessions, I have shown that the Hong Kong dollar is very, very, very volatile. So that's the plan. I just wanted to show you this report. Now, part of that also comes back to the data. So in my case, if I pull up the data for South Africa, this one, and show you the chart, you could see it looks pretty volatile with a lot of negative on the high to low and open to open. So right there you could tell there's a lot of volatility happening, and a bit of majority of this is supposed to be normally distributed, and majority of the trades and returns are statistically in this range. So there's that. Let me just show you. Just got to get back to my. Where was I? Okay, so we want the document. This has all the statistics that you would want found in a in these type of relationships. So you could see here over can't remember what period it is, but I could find out. But here is the negative versus positive returns, and the amount of returns that we're dealing with. As you can see, these are all end of day tick, I believe, of positive versus negative returns each day, average return, both positive and negative, and these are important for me. Positive returns in percent, 0.39, and positive in percent, 0.39. And I'll show you maybe something on the other end. Here's a standard deviation of the different moves. 3 being the most extreme. And then, of course, as I said, we have our charts as well. So here's our weekly and daily ATR views of a week, a month, 3 months, 1 year, 2 years. Okay, so let me just pull up the next one of the New Zealand. Let's just do a comparison here. U.S. and the franc. Now again, this is assuming I don't have that these pairs have no. So it's a similar move, except the high to low is more close to 0 here. Yeah, here, let me just see. Okay. Okay, let me just pull up the right program. Okay, so here's the difference between the two. The high to low and the open to open. The changes is fairly stable, but here, all right, so let me just pull up the documents for the okay, so okay. See, what I look for is usually the number positive returns and negative, which is fairly uneven, I guess, where the returns are here, positive versus negative returns, and here's 0 returns in percent, which is fairly low, only 3%. And again, here's our standard deviation, the charts, the weekly, daily ATR view, and the weekly ATR view. That's an important one. And then the monthly, you can see it's getting more volatile. In the 6-month view or even the 1 year view, you could see it's much more getting more volatile. So if you have an algorithm that calculates what's about to get more volatile, you definitely can use that to your advantage. Whereas if I was to look for the more least volatile, so in our case, the USD Hong Kong, let's check out the chart. See here, there's not as much activity going on at all in the distribution on the open. So that's pretty stable. Let's keep that open, and then we'll pull up the document. Okay. See, the standard deviation is fairly low compared to, which one's this? The New Zealand. Yeah, it's much lower, where it's 4 zeros and we have 3 zeros. So it's not moving as much. So when you look at the positive returns, let's see, so 38% positive, so it's similar, and let's see the weekly. Yeah, the daily is fairly low compared to the New Zealand Japanese yen. So you can see here again, 2 zeros, so it's almost 1%. 6-month view. Well, hang on, that's a monthly. So the New Zealand Japanese yen is much more volatile, whereas the weekly, or let's just more look at the short term. You could see here on the weekly, daily, it's much more volatile here. So this does look correct. So if we do some more analysis here, if you have not seen my video on how your broker's screwing you, if we looked at the rankings of, let's say, the euro, British pound, you wouldn't be making any money. Same with the British pound and US dollar, euro and the franc, euro and the USD. There's no volatility whatsoever. I actually put up a chart. Let me just show you here a news item. I think this is important for people to really understand and just verify the theories here. Okay, so if I did a search for forex low volatility, to see what it says in the most recent news, because I know there was a... Okay, no. So just trying to see if there's any news on the low volatility. I know there was a chart on Bloomberg earlier today, FX low volatility. Bearish euro as currency endures another rough day. FX for volatility, no. Let's see, I just want to get some recent news on this. If we go to the site, that would help. Where's my search? Low FX volatility. See if it finds anything. October 4th. The things we go looking for, October 5th. Next. Maybe what we can get from here. Oh no, we don't want that. You would think, so this is October 6th. Low, actually let me look for the word vol. There's little doubt S&P FX vol index plunge. Here we go. This is what I was wanting to show. Okay, so the FX volatility index plunged after grinding higher through the summer ahead of significant events like the Japanese election. Fourth, usually among the most volatile stretches, lack of movement is notable. Okay, You think that volatility in FX would actually pick up on these things, but so far it's on the other way. The dollar's rallying, and that helps depress volatility levels because that indicates healthier U.S. The only place where signs in U.S. bonds. Okay, so when you look at all the majors, specifically the euro, U.S. dollar, I'd even consider the yuan and the euro franc. It's like everything's fairly stable here, and it is fairly low. But when you start looking at the political, as I said earlier, with New Zealand and the political concerns of South Africa, this is where your growth will be. So if you're trading, let's say the US Euro USD, you're not going to make any money. That's why they want you to use leverage. As I explain in a video on my YouTube channel. It was important to watch, and people have said that there's a lot of truth to this. But there is definitely volatility. You just don't hear about it.
Hey there, how's your trading going?
Okay, so we want 6 ways, screw. I guess I just entered the word screw. It's in there somewhere. Maybe 6 ways. Yeah, here we go. 6 ways you're a retail forex broker. So, you may want to watch that to see what I mean, where they want you to lose leverage on not very volatile currency pairs, and this is one of them, and you'll get pretty well smoked out of your account. So all in all, the plan is, I guess, because of the technical problems of Duca's copy as it stands for now, I will continue working with this one Python script that I have in place, which will force me to stay on Windows because of IQ feed. But this does work, and it seems to be fairly accurate. And we'll leave it at that. Hopefully, it'll help you out. If you got questions, let me know. Later.